Dude, are you serious? So basically, I get a free property and then I save $150,000 in taxes this year.
Yeah. It might be hard to believe, but yeah, you can get a free property and save $150,000 in taxes.
So canceling your paycheck taxes is a real thing, and it can start with just one property. And what I'm holding in my hand right here, I guarantee probably you're watching this right now, you have this same thing. Let's get to this in a second though. Now, I've actually been doing this for some time with my tax strategist and accountant, Kevin. And to be completely honest, I've done this a lot over the years and just recently did it with a brand new Airstream right here, which reduced my taxable income by over $300,000 with just one property. And you'll know by the end of this video because it's the best kept secret that the IRS has that's slated to go away by 2027. So basically, here's how it works. Now, you have an income stream from a W-2, basically your day job, I'm assuming, which means you have something that looks a lot like this, which is basically paycheck. Now, this is the management pay stub from one of my companies. Ignore how much it's for. Instead, I want you to look at the taxes. Anyone who's ever gotten a paycheck can all relate to the sinking feeling when you realize how much the government is taking out of your hard-earned money. Gosh, it's kind of defeating, isn't it? Yeah, taxes. So here in America, your effective tax rate slides on a scale depending on how much you make. Now, I'm in the highest tax bracket, not including state taxes. So if I were to make, let's say $1 million, I'd be on the hook for approximately $300,000 just in federal income tax. Needless to say, it's a lot of money, especially over the years. All right, so here's the game plan. So there are two different ways of doing this. There's the married and there's a single way. The easiest way is if you're married, but I'll share how you can do something similar if you are single as well. And then I'll share with you the Kai way, what I've learned over the years that allows me to write off even more stuff like flights, hotels, trucks, Airstreams, that type of thing. So here's the answer. How can people with W-2s, normal income, how do they cancel out their paycheck taxes?
So the best way to do that with real estate is going to be to qualify as either a real estate professional or to have material participation in a property.
Now, one super fast way is to become a licensed real estate agent or property manager. That may appeal to maybe only 10% of you that are watching this right now. But let's break down what the IRS deems as a real estate professional.
Sure. So a real estate professional, you would think of something like a real estate agent, someone in construction or development, and that they're independent and on their own.
Okay. I know you're like, okay, how does this relate to canceling taxes? Just wait. I'm going to link it all back to how you'll be able to erase the taxes on your paycheck with this, okay? So during my interview with Kevin, there are 3 key things that he brought up. First, work at least 750 total hours in the tax year for your real estate business, which is roughly 14.5 hours a week. Second, have a minimum of 500 of those hours be material participation and directly related to your real estate properties. So think guest, tenant management, bookkeeping, cleaning, maintenance, etc. You also have to work more than anyone else in your business, i.e. cleaner, handyman, co-host, property managers. You have to work more hours than them. And then third, you could actually have a side hustle or another W-2 job, but the total hours just have to be less than your total real estate hours. This will classify you as a real estate professional under the IRS's definition.
But to qualify under material participation, you can still have a normal job and still be able to qualify to write off the losses against your W-2 income.
Next, stop paying federal income taxes. Now that we understand that, if you're married and filed jointly, this is how you do it. First is you have one person keep their W-2 job. This is usually the person with the higher income and better benefits. The other spouse creates a property management business to operate your properties. Remember, we don't need to make a lot of money through the property management business. Our primary strategy here is for tax purposes and then obviously more freedom of your time and resources. Next, you'll have to follow the guidelines of the real estate professional, what I just listed out for you previously, and you are now able to deduct all real estate related expenses, including losses such as normal and bonus depreciation through cost segregation against your ordinary income as joint filers. That's how you cancel out paycheck taxes. Now, listen, there's the key thing here. There's a replacement cost to anything inside a home or investment property because you eventually do have to replace things over time. Think about carpet, hardwood, cabinets, light fixtures, plumbing, etc. Now, what cost segregation does and why it's so critically important is it breaks down all of those expenses or depreciating items inside your home. Now, normally you'd only be able to reduce your taxable income based on the useful life of your cost segregation report. In some cases, it's 27 and a half years to over 30 years for other types of properties. Sometimes you might be able to go as low as 7, 10, or even 15 years, depending on the item inside the house. Now, in this example of $50,000 over the course of 15 years, just as an example, which is about $3,300 a year. Not bad, but nothing super great either. But with bonus depreciation, especially for the 2022 tax year, like what I just did with the Airstream the property in Texas, I and you'll be able to deduct 100% of that cost segregation value from your taxes for that year, which is often, in my case, hundreds of thousands of dollars, and for many others, millions of dollars. Now in 2023, this is the key thing, it drops down to 80%, and it will continue to decrease until 2027. So this is definitely worth taking advantage of while it's here. And this is why I've always said, and a lot of people echo this too, is that real estate is one of the most powerful things to invest in the United States because it's so heavily incentivized by the federal government. So if you have one property or you want to work with one of the best dudes in the tax business today because you want to expand your portfolio, reach out to my personal tax strategist and accountant, Kevin Smoot. The key word here being strategists. Now, there are CPAs out there, they're a dime a dozen, and tax professionals all over the place who basically are just tax filers, paper pushers. But very few actually put together a plan, tactics, strategies, techniques for you to use to minimize your tax liability and how you set up yourself for the next year. Now, Kevin's been doing mine for the last, I think it's 18 years now, and specializes in real estate, especially hacking like what we do, and business tax strategies in return. I'm not joking when I say that he has saved me and my program members millions of dollars by using tax laws and legally avoiding taxes. Remember, it's legal and the IRS actually encourages you to avoid taxes. It is highly illegal and you'll be put in jail or heavily fined for evading taxes. Small distinction between the two, but there's a legal way and an illegal way. We do it the legal way. Now, this last property that I purchased at the end of 2022 was because of a strategy Kevin and I worked out that would generate me equity, cash flows, and reduce my taxable income by over $300,000. It was a no-brainer after our conversation, and it helped me justify the next deal. Now, if you want to work with Kevin and his team, I'll have a link for him down below. If you want a much deeper dive into the world of multiple income streams from one property, consider joining our Land Hacker program, where not only do you get to learn from real professionals like Kevin, but also how to find the right locations, properties, and to develop and build your dream income property where you generate multiple income streams from a single property, kind of like what you see on this channel. If you want to join an active community of hundreds of members, work directly with me, watch me teach through my own personal projects, and learn from tax, finance, glamping, and development professionals, set up a call with me or my team and see if you'd be a good fit for our program. Link just down below. Now, for you folks who are single, there's an option for you too. And I don't mean you're not in a relationship, but the fact that you're a single tax filer. Your love life has no effect on your tax saving. Don't we kind of wish that it was though? Now imagine being able to write off dates. Hey babe, it's the end of the year and we're flying to Paris for lunch. I wish, right? So for singles, you really can't be working a full-time W-2 outside of real estate, unless you can show you work more hours on your real estate business than your full-time gig. I was able to do this in my 20s when I was a contractor doing consulting work. So you freelancers and you independently owned or sole proprietorships, I'd consider putting in an LLC, but you folks, this works really well for you. I simply opened up a property management LLC for my rentals, which at that time, my early 20s was just a handful, like 2 or 3. And then I was able to handle all of my construction, bookkeeping, tenant management, cleaning, maintenance, everything through that LLC. I essentially had 2 streams of income, but my real estate business was legally able to offset my taxes on my consulting and contracting income. The ideal scenario is that you have a high-paying side gig where you spend less than 14 hours a week working, as well as qualifying as a real estate professional. This could be as simple as getting a real estate license or becoming a licensed property manager. Now, here's how it works. Let's say there's a couple where one makes $100,000 and the other makes $30,000. They also happen to have 2 short-term rentals that make $100,000 in gross revenues each year, or about $30,000 net after all expenses. Now combined, the two rentals are worth $800,000. Saving you from all the complicated, boring math of federal tax brackets and how that works, it basically turns out to be about $27,000 in federal income tax each year, meaning that they currently take home $138,000, not taking into account other expenses or state taxes yet. Now, here comes the really interesting part. Let's say that the short-term rental has a property management company that currently takes 30% or $30,000 each year, okay? Spouse 2, the one with the lower income, quits their job and opens up a property management business to manage the rentals. That replaces the $30,000 income. Benefits and healthcare can still come from spouse number 1. Now, after meeting the requirements outlined before, spouse 2 is considered a real estate professional and can now apply all losses and deductions to their joint income, not just the rental business. Now they can take all the depreciation from the cost segregation, which Kevin can do as well, from the two rental properties against their ordinary income, and the couple can actually show a loss, meaning they do not pay any federal income tax and can even carry over losses to the next year. Now, this is a tax savings of $27,000 just in the first year. It's a lot of money, and it allows them to either put that towards a down payment of the next property or to improve their current property and start generating multiple income streams. And then we can just cycle and repeat this year after year. This is how you start to accumulate assets very quickly. It's not about who you can get money from. It's not about partnerships or investors, even though those help. It's about how do you understand tax laws and how do you maximize your use of your assets and funds. In this case, $27,000 that normally would go to the federal government, but instead creates more assets or improves your assets. So that makes a lot more sense. But how the heck am I personally writing off trucks, Airstreams, flights, hotels, Airbnbs, eating out at nice restaurants, that type of stuff? Even the clothes that I wear, I get to write off. Well, it's taking the same exact concept and just magnifying it, multiplying it in different ways. Here's the Kai way. Normally, I wouldn't be able to write off an Airstream, my clothes, shoes, travel plans, or anything like that immediately unless it is directly related to my real estate business, like a glam site. But alongside the property management company, I also created multiple other LLCs that are related to construction, my content creation, the program that I run. All of these are different businesses, LLCs. Now, these businesses allow me to track my expenses, the time, the investments accurately, and in return gives me other legal ways of deducting things from my tax bill each year. Now, when you start to understand how tax laws work, or you have someone in your corner that does and they fight along with you or help coach you through the things, you can create a lot of ways to create tax savings every single year. For me, it's often in the several hundreds of thousands of dollars, sometimes even millions of dollars each year. And because I'm a builder and content creator and need a place to live and work while I'm on site during construction, I'm able to deduct the Airstream and also the truck that needs to pull it. Not including any of my other expenses or deductions, my cost segregation for the property came back right around $200,000, and the Airstream is valued at $120,000. That means this year I'm able to reduce my taxable income by $320,000 just from those two purchases or that one property. Now, the amazing thing is that both of these will be income generating assets, meaning they give me a massive tax break now and they will create income for me in the future. Now, if you think you want to move in this direction and you have income properties, seriously, go talk to Kevin, set up a free consultation with him and tell him that I sent you. He may be able to save you tens of thousands of dollars or even hundreds of thousands of dollars. Link to his calendar and email down below. Now, go legally avoid taxes. Bye.